I also know politicians who are highly placed. I don't want to mention names. I know some who would like to show their garage, and you can see the array of expensive luxury cars that are lined up there. Are they also going to get best of judgment assessment? Because you have that much money, it should be a call to question as to how much you pay as taxation.
There is what we call luxury tax.
Okay.
But it's not yet fully implemented.
What we hear about cryptocurrency is that it's a dark hole. You can't even see what a lot of people are doing.
We know the complexities of the market, and that has already been taken care of in case they decided not to declare your income voluntarily.
What about influencers? And then social media influencers are there. Some of them make some good money doing stuff online. How are they going to pay?
If you remember what really happened to Pella was subject to tax at 36 million. Iyabojo as well in 2023. The same thing happened to Okpeyemi Famakin.
Hello, and welcome to another edition of the Sluice podcast. Today we're going to be talking taxation, the tax law 2025. A lot of people are interested. They want to know, how does this affect me? How will it affect my income? Am I going to be paying more? Am I going to be paying less? Is somebody going to be watching over my account? So to do that, I have in the house someone who knows. He's a tutor of the subject. He's a tutor of taxation at the professional level. He's also an advisor to people who may have taxation issues and come to him for guidance on how to navigate their taxation issue. His name is Victor Atonda. So come with me today as we meet with Victor Atonda, and he takes us through a lot of issues around the tax law 2025. All those your brothers might just have disappeared by the end of today's conversation. Victor, nice to have you on board.
Thank you, Mr. Charles, for having me, and I'm delighted to be here.
Good. Where should we start from? I'm thinking maybe people might want to know, who does this tax law apply to in the first instance? What, issues around tax identity? Who is taxable?
All right. Thank you. A tax identity applies to a taxable person. And who is a taxable person? A person that have economic presence in Nigeria, or a person who earns income in Nigeria. By saying economic presence simply means it may be an overseas company who has a program designed for Nigerians to use, like a software. So Nigerians use this software. You have to pay tax because you earn income through this software built for Nigeria.
Wait, so does it mean that, say, Microsoft, for example, provide a lot of software that are used in Nigeria? Does it mean Microsoft will pay tax in Nigeria?
Yes, because they have economic presence in Nigeria.
Interesting. I hope the law has a way of getting them to pay anyway.
The tax matters has already sort that out. So, as regards that, you have to have your tax identity. Every taxable person is expected to have a tax identity. So this tax identity, before we have what we call tax identification number, whereby for every respective tax authority you have to pay to, you have to have a tax identification number. But now there's a unified tax identity. You don't have to have multiple tax identity, just one, and that is going to be linked to your NIN or your corporate identity number, whereby that is sorted. You don't have to have multiple tax identification number.
So if I don't have a tax identity number right now, how will I get that number? Because I know many people who don't have tax identity number.
It doesn't take much time from you. You just have to go to your webpage and then search for the how to register for tax identification number. So then you'll be able to get it, and it doesn't take much time. Just 2 minutes. Within 2 minutes, you are done. What you just need is your NIN and your names and the other things. Then you are done with it.
Interesting. I have a number that starts with an N. I believe that is a tax identity number.
No,
N
that
something something something.
is it NIN you are talking
No,
about?
no, no, no. It has some digits. There is an N, then there's an hyphen, then it has nine something something.
Yeah, that's tax identification number.
So I don't need another tax number.
Initially, we have what we call tax identification number. Now, it is no more tax identification number. You have to have a unique tax identifier, which we call tax identity. Initially, you can have tax identification number with FRS, with that of State Board of Internal Revenue. But now there is a unified tax identity, whereby you don't have to have multiple tax identification number or tax identity. Just one, which is linked up with your BVN, your NIN, then you are good to go.
So all of us, we need to go and get this number.
Yes.
Oh my God, that's very sad. But you see, how do people get this number?
It is available on web page. Just go through your web and then you'll be able to do it within 2 minutes.
You know what might be my worry with that? What about people who cannot use the web? How do they get numbers? The market women, or people who do not have access? How do they get this number?
So far, a person have individuals at their pace, which have access to internet. They can do it through that, or go to computer centers. You'll be able to do that, or you go to the tax office. They'll be able to register you in time.
Hopefully, the tax authorities will have some programs that will help to accommodate these people who do not have access, or maybe are not literate enough to go out there and get their own tax number, as it were. So, from what you have described, I'm thinking maybe we should look at certain categories of payers or taxable people, as it were. Somebody who has an online shop, he doesn't have a physical shop anywhere, probably just get some goods from China, display it on the WhatsApp status, and then people come and they buy. That kind of a person, is this tax does it apply to him or her?
Yes. So far you are earning income. I've mentioned it earlier. So far you are having any economic presence or you are earning income in Nigeria, you are going to pay tax. So online income are going to be subject to tax right from 2026. The new tax law incorporates the informal sectors into the tax nets. Because according to the reports, the small and medium enterprises constitute 96% of the businesses in Nigeria, and also employed over 80% of workforce. That simply mean our tax net is not that reach the level it's supposed to reach compared to other countries like South Africa, who have the tax to GDP ratio of 25%, that of Kenya 16%. Nigeria, reported last year by World Bank, is 10%. And earlier last month, it was reported that we have 13.5%. That is an improved in our tax to GDP ratio, but still yet we are not capturing to that extent that we're supposed to capture.
So a chunk of our medium and small scale enterprises are outside of the net, outside of the tax net.
Yes.
And this tax law is going to bring more people into that tax net.
Yes.
What about my mom? She's a retiree. Is she going to have to pay tax as well?
Pensioners are going to pay tax.
Oh my God.
So the pensioners are going to pay tax on their pension, but gratuity is not subject to tax. It's exempted from tax. And not all retirees are subject to tax. Earlier this year, it was raised at the House that we should exempt the military retirees from payment of tax on their pensions and any other income that is attributed to their military's service. So all this income are exempted from payment of tax. So far, you're a military person, retiree. But all other persons are to pay tax on their pensions.
But this pension, some of these numbers are very ridiculous, Some of these pensions are even less than minimum wage.
That's what comes in, what we reverse to as the threshold of 800,000 naira. So far, you are an individual earning income less than 800,000 naira on annual basis, you are not going to be subject to tax. So far that income is not greater than 800,000 naira. Any amount greater than that 800,000 naira is going to be subject to tax on this progressive tax rates. For the next 2.2 million is going to attract 15%. The next 9 million is going to attract 18%. The next 30 million is going to attract 21%. The next 25 million is going to attract 23%, and above 50 million is going to subjected to.
So the more you
25%. The more you earn,
the more you pay.
the more you pay.
Is that not going to make people want to reduce how much they earn? Would that be a disincentive to wanting bigger salaries? If I know that this, as my salary goes up, so does my taxation. If I just limit it at a point where I think, oh, okay, maybe the tax is fair.
I think this progressive tax was already ensure equity, because the more you earn, the more you pay. It's not like we are going to say, okay, on the total value you earn, that's what we are going to tax. No, it is progressive. The first 800,000 is not going to be subject to tax. The next 2.2 million over 800,000 is going to be subjected to tax at 15%. You know, it's progressive.
As
it's
it
more
goes,
like
as the
you
salary
earn,
gets bigger, as the earning gets bigger,
bigger,
the amount you're going to pay also get bigger.
Yes.
Interesting. What about influencers? And then social media influencers are there. Some of them make some good money doing stuff online. How are they going to pay? How are they going to be subjected to tax under this new tax law?
Thank you so much. That is why the issue of tax identity came in. The tax identification number, every individuals, every persons that is taxable in Nigeria are expected to have tax identity. That is why the government has made it compulsory for every financial institutions to request tax identity from all their customers that are taxable, even though it's not all customers at the banks are taxable. I supposed to have mentioned earlier, the tax identity is not all Nigerians that are mandated to have tax identity, but all taxable persons are mandated to have tax identity. Individuals that does not earn income, like students, they are not taxable and they are not expected to have tax identity, but they can do that voluntarily. But however, when a student starts earning income, it's going to what?
How would they know? Because I can decide to remain a student for 10 years, so that I don't have to pay.
Now, what's happened is that we determine that from the source whereby the money that flow into your account.
Oh, somebody is going to start watching my account.
Yes, the government are watching the account. And what we are using a policy which we call, with the policy which we reverse to as the receiver and the giver. So the account that is receiving and the account that is giving, we have to what? We have to trace that. And where is the money coming from? If the person that pays money into your account is taxable, that's definitely that income that flow in. We have to look into it. Is it taxable income or not taxable income? But we are not going to tax that income as entered into your account, but we are going to flag up that account to what? To determine if the person is what? Is liable to tax.
It's getting more interesting.
Yeah, as regards the question, the freelancers. So if you decide not to have a tax identification number or tax identity rather, we are going to flag your accounts and call you to come and pay tax. If you remember what really happened to this guy, Pella was subject to tax at 36 million. It is because he mistakenly declared what he made on a week basis, and we have to use what we call presumptive approach to subject Pella to tax.
Oh, all those you go online and say, "Hey, I make this much money." It has become a dangerous venture.
Yeah.
Nah, anything where you chop, you keep quiet.
Not you keep quiet, but you should keep quiet, because whatever you say, whether you say it or not, we are still going to determine whether you have to pay tax and the amount of tax you have to pay. If you remember what really happened to Iyabojo as well in 2023, it was subject to tax at 80 million. The same thing happened to Okpeyemi Famakin earlier this year. It was subject to tax at 80 million, he mistakenly declared its income. That is, on a bad scenario, he made 9 millionaire on weekly basis. So we are able to gather those information, all the information. What are the followers you are having on others that have declared their income? What are the amount of money they earn, and what are the tax we levy them? So we use that to estimate the amount that you have to pay for tax. So we are going to flag up your accounts and call you for tax.
Let's talk a bit about market women. You know, when you go to our typical market, you see the traders all over the whole place. And I don't think there has been a structured approach to, obtaining tax from them. What we have seen in the past were what I would call extortion, in which some people will just show up periodically at their shops and collect some money, probably not even receipted. And they say, oh, you're paying tax. How are things going to change with the market women? If I go to Kiari Market or Akpongbo Market or Idumota, and everywhere is filled with, what is going to change with the way taxation has been in the past vis-a-vis what we are likely to see in 2026 when this new law comes into effect?
Thank you. That's why the presumptive tax regime is in place, whereby we are going to subject to tax, estimate the amount of income of which markets individuals and in their markets. We are going to determine what are things you are into, which market are you, like Osho the markets, how much do the market women make per day. Use that to estimate the amount of income they have to pay. That's what we refer to as presumptive. It is an approach whereby we estimate the amount, we presumed the amount of tax to be paid. And there's not going to be double or multiple taxation again. You're not going to be paying multiple tax once and for all. But it is now best for every market individuals to have a proper record, whereby we have what we call digital filing. Immediately you make payments for services, you get receipts, you upload them. But now we understand that not all market individuals have access to this. That is why the presumptive tax regime was put into place in order to achieve this objective. But multiple taxation has already been scrapped out.
This presumptive thing is quite ingenious. You know what I'm thinking is, I lived in another part of the world before where when it is time to file taxes, nobody needs to start begging you to file. You go online, you file your own taxes by yourself. You tell the government how much you earn in different categories of income, and the tax, and even if you have a refund, the refund shows up, because sometimes there might have been certain deduction here and there, and then they might say, oh, you have paid more than you're supposed to pay. Are we going to start having issues of tax refund also in Nigeria? If, as I was earning my income, certain deductions were being made and all the rest, at the end of the year, if I file my returns and it is found that I've been overcharged, will somebody pay me back?
There is what we refer to as tax credits, so far that taxation is made in Nigeria. For instance, you earn income from overseas, you earn income from Nigeria, and you're being subjected to tax in overseas. So there is what we call treaty with some countries. We have treaty with South Africa, China, with Canada, UK, all these countries that we have treaty with. We are not going to give you what's called tax credit. We are going to give you tax credits on the income that has already been subject to tax. So that amount which is not in excess of that of the tax you're supposed to pay in Nigeria. For instance, you have to pay tax in Nigeria at 15%, which the 15% is 3 million. And you have already been subject to tax in overseas. You pay tax of 2 million. The amount you are going to pay as tax in Nigeria is going to be on that 1 million.
Oh, it
that's
will
1
take
million
cognizance of the tax that has already been paid in all those other places
that we have treaty with. But now this new tax reform has also put what we call unilateral relief, whereby some other countries that we don't have treaty with, you can also claim tax credits, a tax relief on such income. So to that extent, as earlier mentioned, to that extent that it is not above that of Nigeria, you are going to be having tax credits. For instance, you have a tax you've already paid the total tax you paid overseas is 3 million, and that of Nigeria is 2 million. I'm not going to give you that a refund of 1 million on such tax you paid overseas. But in the case of Nigeria, in the case whereby that of Nigeria, the amount you have to pay in Nigeria is 5 million, and you've already paid 3 million. The only tax you are going to pay in Nigeria is going to be that 2 million,
That's
which is excess of that the amount you're supposed to pay on your global income. We call it worldwide income or global income. The income you make from all sources based in Nigeria, both in Nigeria and that of overseas.
In a changing environment where we now have a lot of Nigerians who are sitting in their rooms every day, they don't go anywhere. They are working for certain companies who are abroad and they're getting paid in dollars. How will this tax law work for them? What should they be bothered about? Are they going to be able to pay taxes? Will government be able to see the money that those guys are earning?
Yes. There's what we call, if that money earning overseas is brought into Nigeria, you are going to be subject to tax.
As long as it comes to Nigeria.
As long as you bring it to
pay.
Nigeria, you must pay.
So they work for home cannot shield you from taxation.
Yes.
Or my employer is abroad and is paying me in foreign currency, it doesn't shield you from
so
taxation.
far that income enter Nigeria is subject to
pay
tax.
Very, very interesting dimension.
And I must also chip in. Basically, we have different individuals that have been subject to tax. We subject them to tax based on their residence. We have what we call the residence individuals and non-residence individuals. The residence individuals are individuals that reside in Nigeria for a period more than 183 days. Some individuals that are called non-residents are those individuals that spend or reside in Nigeria for a period less than 183 days. So those individuals, they are going to be subject to tax. All individuals that are residents are going to be subject to tax.
How about those that are not residents?
Those that are not residents, if you are an employee, you will reside in Nigeria for a period less than 183 days. You are not going to be subject to tax on your employment income. You are what? Not taxable, residents. But if it is other sources of income from trade or businesses, or income from passive income like dividend, rent, you are going to be subject to tax.
Interesting. I'm coming to that.
Whether you are a resident or you are not a resident, you are going to be subject to tax.
So, Victor, let's look at this scenario. You said something about non-resident, people who stay less than 183 days in the country. Can I be staying 182 and disappearing and coming back so that I can beat that law that says if I stay 183 days, I'll pay tax?
Thank you for that. What we consider as 183 days is the period that span within 1 year.
Okay.
So from January to December, if you flow in and out, we are still going to determine the flow in and out within that short period, within that period of a year.
You will add it together.
We
so
add
if
it
I
together.
come and I left and then came back within 1 year, you will add everything together.
Yes.
Okay.
Even if you traveled multiple times, we are going to consider the day you are leaving is part of it. The day you enter is part of it. So we are going to calculate all this to determine the 183 days. So far you stay in Nigeria for 183 days, you are going to be subject to tax.
Let's talk about the capital markets. People buy stock and then maybe when it appreciates, they sell and they make some income from selling their stock. The rumors on the street now is that there's going to be a tax hit on all those incomes. And people are scared that will that not even affect the capital market? But how is this tax, the capital gain tax, how is it going to affect that segment of our economy? People who buy shares and sell shares and make money from selling shares.
There is what we call relief for these individuals and persons. And we have different kind of relief. We have what's called rollover relief. Rollover relief is a relief that is available for any persons who earn capital gain but reinvested that money into the capital market. Government did this in order to promote reinvestment, in order to grow our economy. So we are going to start seeing people reinvesting their capital and their gain in order to enjoy this rollover relief.
That's interesting.
Aside of that, the threshold that I mentioned that is available for individuals, any individuals like traders that invest in the capital market, and of which the total capital gain is not greater than 800,000, they are not going to be subject to tax. But immediately that capital gain is greater than 800,000 on annual basis, is going to be subject to tax.
So it's going to be taxed as part of the income of that person.
Part of the income of that person. But it's going to be in alignment with that of the personal income tax or corporate tax, if it's a corporate person or an individual person.
You know, just along the line of what we're talking about right now, I also know politicians who are highly placed. I don't want to mention names. I know some who would like to show their garage, and you can see the array of expensive luxury cars that are lined up there. Are they also going to get best of judgment assessment? Because you have that much money, it should be a call to question as to how much you pay as taxation. Do you think this new tax law will not just be a law for small and medium scale enterprises and influencers? How about those people as well?
There is what we call luxury tax.
Okay.
But it's not yet fully implemented. And subsequently, maybe as we continue in this new tax reform, we should be expecting much to come in. But however, currently, what we tax is your income and what you earn. So the best of judgments is going to apply to them so far they earn income. So the more you earn, the more you pay. So luxury tax is still going to come in, but it's not yet fully implemented.
There's one other part I want us to touch on before we get off this program, and it has to do with cryptocurrency. A lot of people are also making money from cryptocurrency and what you call NFTs and other digital assets. People are making money from them. What we hear about cryptocurrency is that it's a dark hole. You can't even see what a lot of people are doing in that place. So, number one, are they going to have to pay taxes too? And if they are going to have to pay taxes, and some of the stories about cryptocurrencies is that you can't see through crypto, transactions. So how are we going to get the taxes from them?
They are expected to declare their income. We know the complexities of the markets, and that has already been taken care of in case you decided not to declare your income voluntarily. We are going to use presumptive tax regime to subject it to tax. So we are going to estimate the amount of income they are making in that environment and subject it to tax. So when you have been overtaxed, you yourself you come and declare
this no be waiting I make
yes, this is the extra amount. So it is expected of every individual to keep proper records. That's what proper record keeping is going to come into place. And I love this new tax law because it's going to create a lot of job opportunities for people, because you start seeing entity.
So you people that are advising folks on taxation, you be like say your season don't come.
These are season already. Because you start seeing tax individuals or tax practitioners going to shops, having multiple clients, help them file their returns and get paid. And at the same time, you start seeing different software builders building softwares to sort these tax matters. And I think governments are putting a lot of things in place in order to organize workshop and other seminars to educate people more about these tax matters. And I love these things you did. This is also part of the things we're supposed to do to educate people about tax matters.
Very, very, very important. I have always seen this as a duty that citizens' education is a critical deliverable for anybody who knows. So bringing you know taxation, you teach taxation, you advise people on taxation. So it's a duty that we owe to the society to ensure that they understand the policies of government, and that is at the heart of the Sluice podcast in itself, letting people know how government policies affect them and connecting them to this policy so that they can make the best of it, as it were. I'm looking forward to how these tax laws will play out, especially driving like all the regulation. Now, we're individuals. will be the one. They're not even waiting for anybody.
Yeah.
To say the year has ended, tax people, this is how much I earn. And then by the time you put it on the website, I'm sure it will compute what your tax amount is supposed to be. And you can also sit down at your laptop there or something and make the payment. And if you don't declare, then they will give an estimated, best of judgment, I used to call it. I'll give it to you. Then something will force you to now say, I didn't earn this much now. Then you carry yourself to go and meet them or to go and meet tax advisors like you to say, what do I do? See what they have sent to me from the tax office. And I believe that must have been what those influencers that you mentioned had to do when they receive those best of judgment thing. Victor, thank you very much. It's been a rewarding and engaging moment we had. But I'm sure there is still a lot left on the table. And what is crossing my mind is we may have to call you back again for a live stream session. Part of what Sluice, the Sluice podcast is going to be doing in this season is also live streaming. So when we're going to have the live streaming session, we would like to be able to invite you to come and shed more light on issues and probably attend to live questions from live audience members who may have one clarification or the other to seek about this taxation. Hope it has been fulfilled, even for you, as you educate the citizens. But let me, on a final note, are there some closing words that you have for our people with respect to this new tax law in a few sentences,
Thank you so much for this wonderful opportunity. I must appreciate you. And at the same time, I will also like to point out it is essential for every individuals that are taxable to go and register for their tax. It is essential for you. Go and get tax identity before it is now being a complicated issue for you. Because starting from 2026, your account will be flagged and you are going to be subject to tax. It is to ensure an inclusive environment where everybody, every individuals and persons are inclusive, are included in the economy. That is essential for you. Go and get your tax identification number, a tax identity rather. It is initially called tax identification number, but now it is tax identity. Go and get that, and if you are informed, you'll be transformed. Get much knowledge about these tax matters, and you are good to go. Thank you.
Thank you, Victor. That was a beautiful session we have had. Ladies and gentlemen, I hope you have been educated about how the tax law 2025 will come into force in 2026, how it will affect you as an individual, as a business. But I'm sure you still have more questions. That is why we're going to have another edition that will be live streamed. So that will probably take on some of those things that we were not able to take on this particular section or session. On this note, we can call it a wrap. My name is Charles Olojede. And I hope you continue to engage with us on all our social media handles that are currently scrolling on your table. Until the next time when we come with another topical issues, have a beautiful day.